Hey everyone, welcome to your daily update for Sol and BTC. If this is your first time, you might not understand half of what I have to say, so just maybe check out the educational playlist, that kind of thing. It'll make more sense after that. If you're a regular, then welcome back, and let's kick into it. So liquidity is definitely showing up as we're so back mode. Doesn't take much of a pump for everyone to suddenly believe that we're going to be going to all-time highs again. Yesterday, was quite a bullish video. They sold down most of the good closes just before the end of the day, with sell pressure just kicked in right in those last moments. Um, but like any day, you can make it back. It's just what is the next close? What is the next close, etc. Like when we dumped from around 110k, it wasn't the loss of a weekly level; it was the loss of an 8-day level. And so if you get a bad weekly close, it doesn't mean you can't then get a good 8-day close, which might actually end up pushing the weekly up, and it'll end up being a whole nother week before someone who's watching the weekly chart even realizes that the price is actually going up. Um, so kind of what I'm seeing today, just overview, but we'll get into more details. What I am sort of seeing today is that yes, we're going up, but we have started from kind of the wrong places on the daily. And that does mean that when we run into a bit of resistance, it is going to be quite easy for the price to actually have like a dump or possibly a double bottom, maybe even lower. But if we get the key closes that we want today, though, then it might actually get a bit of continuation. So the monthly minimum target, which for the monthly fib bounce was 89k, and we got to 88.8. We're probably going to hit 89 just during this video, I'd say, because we're back at 88.8 now. And it's a bit hard structurally to say exactly what Sol is up to, because we know it's got a lot of targets pointing to 177. 175, 176, 162. there's heaps of these upside targets pointing. They just haven't really played out because effectively you've just had BTC in a bit of a downward spiral for a couple of weeks. So if BTC does get past 89 and get a bit of continuation and start getting some good closes, then I think you'll find structurally Sol will just kick back in and start doing its thing again. So if we were to get a dump, then certainly a double bottom, very, very possible, looking at the BTC liquidity. If we have a look at the Sol one-day liquidity, yeah, easy to do it on Sol as well. There's plenty of longs that have come in to chase this pump, so they all feel pretty safe having their liquidation levels down near the bottom. So yeah, definitely easy enough to go down there. The other area that might simply just be a pullback during range creation is going to be this 130 area. So we'll have a bit of a look at that on the chart as well. So, okay, if it was to continue to the upside, most of the liquidity on the 1 day is gone when it comes to Sol. There wasn't really a lot of shorts there to take on the 1 day. BTC, once you sort of hit about 90k, 91k, it's pretty much 1 day is gone. But if we have a bit of a look at the others, you can see BTC is very, when you go to the 7 day, it's very, very even. Sort of 95 being roughly the top and 80 being roughly the bottom. And for Sol, it would sort of be about that 120, 119 area, and about that 146, 147. And I think that 147 is probably the area you really need to keep an eye on. There's a lot of resistance up around there. So if we look at the 30-day, then 30-day has a bit more into 150, 152 when you're looking at Sol, and sort of up to about that 97, 98 area when you look at BTC, with the bottoms basically being about the same. All right, let's have a look at these charts. Okay, so looking at Sol BTC strength on the daily, the last couple of days, as we've got close to the end of the day, basically they've just sold the price or sold the strength down so that it hasn't been a hard close. So just if you're new, a hard close needs to be, in this case, an accumulation hard close to break this level down here, this break level, which is 15006. To break it, it needs to be an accumulation candle where the wick can be touching, but the body cannot. So, here we couldn't break out. And if you go back to this day in the video that I did that day, I was saying, hey, this looks a bit fake, because we've come from the wrong side of trend, we've come from the wrong side of the break level. We're pumping up, but we can't actually break it like this. And then sure enough, you had 3 days of, downwards pressure, etc., etc. Yesterday, we sort of thought maybe we'd get that break, but they sold it right down, just right near the end of the day. Same thing can happen today. There's no reason why not. Like it's got 3 hours and 20 minutes to go, so this candle could end up coming all the way back. Especially now it's hit the resistance at the top, which is always that thing I was a bit skeptical of. Like why were they leaving this resistance behind? Now, if this is going to be bullish, then what's going to happen is it's going to come up and it's going to close, with little to no wick and up inside that hold area, in which case it'll create some kind of new range trend. It'll be a break of the exterior trend. There'll be a range trend. And if it closes with no wick, it can open on the top side of it, and that's how price can suddenly just pump. So if you ever wonder how they can just close a day and then just pump straight away, it's usually because structurally what they do here. So I guess we're just going to have to wait and see, because we've got 3 hours and 19 minutes to go. And it is going to be a break of the exterior, all the way from the top. So it's going to be a break of the actual downtrend, proper break of the downtrend. So it's going to move to there. And so you can kind of see how if they were to close this, above about 15722 without being over dramatic and not having a big wick in the meantime, like we don't want to see this pump up and then pull back, because that changes where the resistances sit. But if they just grind and grind and grind and close, about that 15702 area, they'll end up opening on the top of all of the trends that they create, and then they effectively could flip the hold level and continue to push up. So that's probably it's got the most bullish potential. We won't say it's bullish until it closes, but it's got the most bullish potential out of every single close that we've sort of seen this week. And lastly, this is the range level, which is 15467, and 15467 is, as you can see, it's never been able to close over the top of it. So that'll be another sort of telltale sign. So in the next 3 hours, if they start pulling it back down to close back under that level, then you're going to expect it to come back down and test these 1.4s again, like it has pretty much most days, apart from yesterday. And this is a bit of a sign you look for as to whether you're going to get a breakout. So we have the range level here at level 1, which is 14933, and then we have range creation, which kicks in after one, is if you get a hard close, so full body, nothing touching, hard close, or sorry, wick can touch, hard close above 15467. Now, if you come down and focus on the prior level, what happens is it hits it, it hits it, it hits it, it hits it. So every time it hits it, it can break it. But the time that it failed to get back to it, which was yesterday's candle, the next time it hits it, you get volume. And that's what this candle is. So this is a very, very, very bullish drinking game. The word today is bullish. That is a very bullish candle and structure, and the way that it failed to get to it yesterday. They tried to sell it down yesterday, didn't want to break the break level, but failed to get back to the range level. Now we're up above the next potential range level. One more day of accumulation above here, and then you could look at any retrace back to this 15467. You could look at strength pushing back into your longs and then heading up to that 1.6 area. So that is where that is. Let's hope they don't just sell it down by the end of the day. All right, let's have a look at these safety assets. Okay, so on the daily, as you can imagine, with altcoins suddenly pumping, safety assets has rejected. So we're where we want it to be, as far as taking incremental steps towards alts having a decent pump. So there's a couple of things to consider Number one is we have tapped this 67.26 support. So this is a prior break level. It's become an origin level. It is probably going to bounce, which means you could see a retracement in the dominance of alts because of that. However, we have also gone back underneath the resistance level of 67.91, and we're going to be opening the candle under both the trends. We're going to be underneath, it's actually a trend break of that upper trend as well, so that's official loss of that trend, which is good as far as seeing strength move into altcoins. And we've gone back under a prior broken resistance trend as well, so there is a lot here for, yes, a temporary bounce, and then we run into that resistance, and then we could come down and break these bottom levels. So in which case we would be heading back down to sort of 66.86 or the range trends down here, which are sort of in more like the 66.5 to less. So yeah, that's not bad. It's a stepping stone along the way. The other thing we could look at is just how it closes. So if we want to see continuation, what you need is a blue candle hard closing under 67.41. So that creates a range level. It probably will happen, and you can when you chuck a fib on a candle like this, and then you see straight away that you have the level 2 of the range lines up with the support that exists at 66.86. It's not a coincidence. You need to have something that can offer support or resistance at each one of these levels. So if there's ever going to be a day that something reverses or something changes or a range gets created, it's generally when the candle, putting a fibs on the candle actually matches the levels that you already know that this level is support. So if we do close under the 67.41 today, then yeah, a potential fall down to that 66.86 and then a bounce back up from there is very, very possible based on the ranging. If it hard closes the candle under that 67.41, then it may bounce between them and then try to break down to the next level. So yeah, that's all that's going on there. And if it gets pulled back up just above that 67.41 by the end of the day, then that's when it could potentially bounce back up to test the range 1 level, which is that 67.75. All right, let's have a look at the totals. So total on the daily is just tapping the range creator. Actually, sorry, it's level 2. So this is kind of what I was referring to at the beginning about how we are sort of coming from the wrong place. So we have this candle back here on the 22nd of November, and we've gone up, but we didn't actually get over or close over the 2.66. So then this candle that we're currently looking at closing today, it's come from the wrong side of the range level, and it's sort of just tapping into that 2.68, the 2.74 level. So, what you can see from this is a retracement pretty much of the entirety of yesterday's move. If it doesn't close over that 2.74, it hasn't technically broken the range trend. It's just sort of poked its head over the top of it. And the only level that it's actually hard closing is this 2.61 level. So, and it is hard closing the prior downtrend. So what will happen today is you'll get a break of the interior trend, which will move to the top side here. It's very tricky price action because nothing at that level is then actually a broken, resistance. So it could just hit the underside of the 2.74, and then it could end up taking a retracement all the way back to the 1. It could even go deeper because the other on the 22nd of November, it shifted the trend, and we haven't actually gone down and bounced off that or tested it as support yet. So it's possible that you see, all the way back to 2.54. The other thing, of course, is that they may just be trying to time this so that on daily close in 3 hours, it just pokes up enough that it's above the 2.74 level. It's not a great thing if that happens, because still it hasn't really hard closed, these middle levels, which means if it takes a dump, it can be a really fast and big dump. And it can still do that from anywhere between 2.74 and 2.82, because those levels aren't hard closed either. Even if it opens above them, it's you need one more day. So where that is kind of just a little bit tricky. Really pushing into resistance and really hasn't hard closed anything above that 2.61. So if we flip this around and look at it from the other direction, what are we closing? So we're moving back up inside the hold that's actually trying to create distribution. We managed to get to the 2. We are hard closing back inside the 1 to the 1. So, sorry, the 1.68 to the 1. So, you've sort of got a range forming inside of a range, and it definitely looks like it'll be a bottom, because the distribution is failing. If you get another leg down, it's probably a leg down that is something that, well, I'd be buying it. So, yeah, and it could end up bouncing. I'm just trying to see where that actually is. So 2.73. So if it closes under 2.73, as far as the distribution range goes, it might head back to 1.63, but 1.63 is hard closed in the opposite direction. So then 1.63 might just bounce straight back to 2.73. So it could be actually a decent sort of trade inside there on whatever asset you're actually looking to trade. Right. What else we got? And so this is when you take BTC out of the equation, and this looks a lot stronger. So there's definitely strength towards alts. So yeah, that's gone up and hit level 2, hard close to level 1. It's gone right over the top of its trends. It's very much back up inside the hold level. In fact, it's well up inside the 1. Yeah, so that's looking good. Okay, let's have a look at Sol. Okay, so we've got a few closes today, not too many, but enough to get a bit of a picture painted. So the 1-day close has pretty much completely wrecked the distribution. So this was the distribution control here, and it never made it to 120. We're now looking like we're going to hard close an accumulation candle back up inside of it. It's not fully inside the body, which would be better, but still it looks like it's giving a distribution a bit of a hiding. However, like the market caps, just the thing you got to watch here is that we're poking above the range trend. We're back up inside the interior support trend. We're not technically breaking the downtrend because the body is on it. We're not hard closing the 1618 level, which would be the base of the range because this candle started under it. We are hard closing level 1. So you could get a reversal or a dip in the next day, pretty much back down to this level 1. And then you don't know what comes after that, whether it finds resistance again at the range trend, and then keeps working down. We haven't tested the bottom side trend from this either, so there is still the possibility this comes back and says hello to 120. But if it does keep moving up, then 142 and 147 will be the top sides of the new range that it's trying to create. If it closes over that 147 level, then it'll be a new range on a higher time frame. But yeah, as it currently stands, it's looking pretty bullish. I would be conscious of this 147, and we'll see just how that shows up on some of these other time frames. But that's yeah, if it was to pull back underneath the 137.682 by the end of the day, then you'd expect that retrace to kick in probably tomorrow. But yeah, as it stands, that's looking pretty bullish. Okay, so the 2-day close, it's not high enough up to be creating a range. So if we have a look at this, it would have to close over 143.363 to even be possible to create a range. And then it needs another candle as well. So we are in a distribution range from the top side here and 145, which we haven't tested yet. So there is a possibility that it hits the 145, maybe doesn't get to the 147, and then does a rejection from the 145 back down to this 130 level. So that's something else. There's actually pretty much an older range and a newer range both kind of crossing over here. So you've got the original range from back in April, where we are bouncing off the range base. So the target for that is 141, which we're nearly at now. And whilst that has been happening, that move, it's fighting this distribution range where the range base is 145. So, and the range base would try to target 130. So you can sort of see, sorry if you're just listening to this, but you'd have to have a screen, etc., to see what I'm doing here. But you've got a couple of these boxes, and even if you do get a rejection off the 145, it's still sort of the range actually escalating in an upwards direction, even though it's technically distribution. So yeah, we've got ranges forming inside ranges. It is definitely trying to reverse. Like this is what reversals look like when distribution starts to fail and older accumulation from the past kicks in. And people with orders that date back to April, they're very patient. It's big money. They're sitting there, they're waiting, and that's why you hit these levels and you get these bounces. So it's not looking too bad. Let's have a look at the 4-day close. Okay, so the 4-day close, it looks like it might close back up inside the 136.241. If it does, then it's probably going to try and push through to that 147 level. And there would be an older range in play here also, which is from back here. And that's already hit its target. So that move from 123 to 136 has already played out. So that's looking like it might want to give some continuation. Okay, the 8-day. This is going to try and push back to 156, but it's going to run into resistance at about 147, 148 area. So that's got a bit of confluence with some kind of pullback happening. And once we get into some of this bigger stuff, and these can take a long time to play out, but the important thing is looking at the 41D range. We haven't actually gone below 117.315. So as long as we don't do that on the next candle, then this is failing to create a downside range. It can, based on where it is though, actually come down and hit that on the next candle and then bounce back to the one. So you just got to be conscious that we could get a dip to 117 if depending on where your liquidation levels and that kind of thing are. And also if we do, then you've got the ability to look at longs all the way back up to 155. Okay, the 82-day is going to build a range trend. It's going to shift the support trend to the bottom. 148 is potentially going to be resistance, being the body hold level. So it hasn't gone below the wick. It clearly hasn't gone. It's got no ability to create a downwards range based on the size of those candles. So, but it is a bit more confluence that we might run into that 147, 148 area and then have some kind of pushback. If it was to push back to the relocated trend, it would mean the new trend would be sitting at about 130, so that sort of makes a bit of sense, 130, 131. And the range trend would be sitting down at about 125. There is another range trend down at about 109, but it's hard to say. What it also introduces to the upside is the potential of a retest of prior broken trend. And I'm going to say this, but obviously don't get too excited. But that means 270, because quite often when you break a trend, there is a high probability of retesting it, and that's both directions. So that's why you break out and you come back and then you bounce again. Same thing when you break down, you can often go up and then dump again. So it does introduce some pretty interesting numbers. Looking over at the 164, so this biggest close today. This is going to open the next candle on the wrong side of the interior trend. The interior trend will be sitting roughly at about 147. So you can see this number 147 just keeps popping up. Now, if it does reject, and it's a 50-50 thing, it's not a hard close trend, so it doesn't have to reject. Like first touch of a hard close trend is going to reject or support. First touch of a non-hard close trend is 50-50. But if they do want to take out all the people that have chased the longs, then they could reject off the backside of that trend and then come down to the new support trend that has not been tested yet, hasn't had its first touch as a support trend, and that is sitting down there at about 120. Earlier in the piece, it would be a bit lower, but so 120-ish. So there could be a move up to 147 and a dump to 120, just purely based on those two trends. All right. Failing that, if it just keeps pushing up, then go Bulls. Okay, let's have a look at BTC. Okay, so BTC on the daily, it's come up and hit the backside of the interior uptrend, so that's giving it resistance effectively. But if we sort of retrace a few steps here, we had an origin level. We bounced off an origin level. We created our first hold. It's trying to create a range. This would be the range. It's amazing how efficient charts are. The two things that it kind of wants to do is it wants to hit this level 2, which is the 88,993. It also wants to test the backside of that trend. So, of course, it's gone up and done that, both basically at the same time. So we're looking really for a close over this 88,993 level. The warning signs here are very much the same as Sol. It's come from the wrong side of the range levels, so it is very possible that it closes under the 88,993 and then takes a dump back to the 86,880 level, or lower, because it really would have to go back to 85,575 to find the first hard closed support level. And that hard close support level really only offers a minimum bounce back up to about the 86.8 area. So that's if we look at it from the new range that's been created. Now, if we look at it from the range that's trying to actually send the price down, because these two things are like mortal enemies and they're having a fight, it's getting back inside the 86,469. It is hard closing that, which means just a little bit more of a push up to this 89,265. And the 89,265 is the level that we spoke about yesterday, the day before, probably for about the last 2 weeks, because it's the monthly level. It's the one that we really should be going back to 89. And hey, look, we're nearly at, well, we are at 89 technically, but what I mean is we really should be going back to 89 point something. If this candle closes exactly in this position, it would not surprise me at all if the next candle just opens, touches this, pushes up a bit into it or whatever, and then comes back down to test this 86 area. So because it is kind of like a hard close in reverse. And the fact that we never got a close over the 2 means that the range has failed to get past halfway. So with 4 being the 72K is where it wants to go, failing to hard close under the 81,947 means that it's coming back up here to test the top. If it can keep moving up and get the next candle closed inside the hold, then it's probably just going to break. And yeah, that's looking like a reasonable sign of reversal. So if we have a peek back over here, there's a couple of old historic ranges that created this. So one is this one, and the other one, and this is why the last couple of days the price was just so crushed, because they opened it sort of in between down ranges and up ranges. But this is probably one of the key ones right here. The fact that we're actually getting this hard close now after bouncing off this 85,355 level, that shows that this is trying to move up. So I'll just quickly delete one of those. Yes, that one. So this is trying to push to 89,639, which means it should then complete those monthly targets and all that kind of stuff. So that's looking, yeah, looking good. Okay, 2-day. The 2-day range did play out to its full extent, so it got down to that 82K area. It's kind of in the middle of nowhere. It's not moving trends. It's not really doing too much. It's not really hard closing anything all that well. It could just double bottom. There's probably a 2-day range. There is, so let's have a look back from the past, see if that shows up anything. So that one. I mean, it's trying to push through to 92. So, but it's doing it from the wrong side of level 1. The trade in this was actually really just this 81 up to this 85, but it could be a minor range inside of it, which is this one. And yeah, that's sort of about that same thing. That would try to push up to 91. And this is not, I don't think this has gone up enough. So this hasn't gone up enough to create its own range, but you can see how the 91 area is quite key, because it either gets over it and creates a new range from the present time, or it goes to it anyway to retest, some of these older ranges. So it's kind of like, is 91 a target? Yet 91's a target. What happens when we get to 91? Well, it either completes its retests and rejects, or it overcomes it and creates a new range starting from this point in time, in which case the next levels become 98, 105, and 112. So okay. Looking at the 4-day, I mentioned this one in the Discord earlier today because it's a great example of trend liquidity sweeps, and this is really bullish. So we moved the trend. They went underneath it. They spent 3 out of 4 days, underneath it, sweeping liquidity, getting people to capitulate, getting everyone to scream bearish, and then on the last day they go back up. And the targets that were in play here were always that the price should have hit 86 and gone to 88, and it didn't. It hit 86 and then it just went down. It moved the trend and then it just dove through the trend. But we've got 2 hours to go on the time frame, and the candle is now meeting its obligations after sweeping all that liquidity. So the reason this is so bullish is that if you get a liquidity sweep on a trend in one direction, you tend to deposit what is bought by a sweep of a trend in another direction, which means that there should be upside from this bounce, like continuation. Okay. And over on the 8-day, and this is the one that started all the chaos. It was this candle, one of these 2 candles in here. We had a very old range that got broken. If I can find it. Can I even find it? Something. Maybe I can't find it. Trust me, bro. There was a range. Oh, now it's bothering me. Oh, there it is. That one. All right, so this hard close here, was the one that started all the chaos. So everyone's watching the weekly chart because weeklies are very popular charts. People watch monthlies, weeklies, dailies, 4 hours, etc. And then sitting here was an 8-day range, which is bigger than a weekly. So if you lose an 8-day range, the weekly doesn't mean much. It's just going to dump. And that was that blue hard close there, back underneath the range trend from November 24. Next candle comes up, rejects off the back side of it, and just goes, right? Now, the hold for the weekly range, the 8-day range, was down here at 82. So we were going to have to sort of come and visit this thing. We should have bounced from 88, 500 back up to 95. But once again, we had 8 days to go on the candle, so why not go and take all that liquidity, right? And that's effectively that wick. Today, they're going to move all these trends and they're going to shift to the bottom of this candle. You may get a revisit and a retest of the trends, which could be like, your double bottom type scenario. They may even sweep the trends after they put them in, which means sweeping the bottom of this wick. But the move that's in play here really is still to head back up to that sort of, 95 area. And if it recovers the 95 area, then it's the 106. If it recovers the 106, then it's the 118. If it recovers the 118, then it's 129, which would be, potentially a blow-off top scenario if that plays out. But that's our little nasty 8-day range and what started all of this chaos. But it is a close over 88.5 today is positive. That's the level we want to close over. Okay, getting into 41 days, so just some of the bigger stuff. We're going to get a new range trend. We're going to move the support trends. Actually, sorry, we haven't even tested the support trend. We're breaking one interior. We're creating support on a range trend. If we close over 86.523, then it's failed distribution. And it's either going to come down, grab some liquidity and bounce, or it's just going to travel up. So its targets would be 97.3, 99.4, and 101.6. Okay. 162. It's just right on the line. So I mentioned in the Discord, there is always one doomsday close that just kind of sits there hiding. And this is it. So it looks like it will open on the top side of the new trend. So trend will shift and break. Now, the reason this could be a doomsday close is because if it retests the body of the whole candle here, January 1st whole candle, wow, then it could easily come down to the 82 again. It could try to go and complete a range. So let's be real. 74 and 51 are potential areas that this could reject to if it gets continuation and tries to create a range. However, the other side of this is that the trend, which shifts from the one that's there on the screen to the bottom of the new candle, if it closes kind of even just where it is now, even like a couple of dollars more, then that trend can break that hold, okay, because it's not a very strong hold. And that means that there'd be a bit of a fight that would kick in, probably at about that 935.70, and that's been a confluent price that we know is quite important for the last few days when we've been looking at closes. If it does come up and hit that, maybe it does reject off it. It could be an area to look to take profits, even though you got some higher targets based on the lower time frames. You got a 164-day close that could find resistance, and that's going to trump a lot of the other closes potentially. But if the trend does break the hold, then the next logical place for it to go is the prior trend up here, topside resistance trend, which is about 113. And then it could retest the trend that it broke, which is going to be more like 128 or higher. So it is possible, you can see that there is bull cases here for the people that are saying it's not over. Okay, cool. That's us for those. Have a quick look at Tesla. Well, that's good. Enough said. So I think what we said yesterday was that we needed to open up on the top side of the trends. We did. So if it closes yellow, which it probably has now, looking at that, then we are going to end up with a new trend. So a trend break, a new trend. It's the next candle again could open either on the top side of that and keep moving up, or the underside of that and have a bit of a pushback. It's hard to say what the break level is in all those candles, because normally it's the first distribution candle, but stocks can be a bit weird. So it's 408.90 is what looks like the break level. So as long as and it actually looks like a prior trend as well. So as long as it gets an accumulation close over the top of that, then it's starting to work its way back up again. And yeah, you can't be, yeah, that is the most bullish outcome that we could have had based on what the daily structure was previously. Looking at the weekly, what that means. Oops, got my tool on there. Well, it bounced off the new weekly trend. Looks like it's trying to reverse the distribution. So let's just see how that's sitting. Yeah, so it's up over the. So as long as the weekly closes over the 415.08, then it does have a trend to deal with. And then it's probably going to have some kind of fight with that whole 434 level. But that trend looks like it is starting the process of reversing. So as you can see, it got to the 2. So your range basically, if you're going to have a retracement and continuation, it'll generally be the 2, and then it can keep going. If you're going to have like a really, really nasty dump, it'll normally be all the way to the 4. That's the full range. Or pump if it's the other way around, So that's all for Tesla. Yeah, if it opens next week back above that topside downtrend, then that'd be really positive. But even where it is making the right motions towards going up. Cool. What was the other one? MicroStrategy. I think we were just looking to see if that whether that was holding that 3-month level, eh? Ooh, too many. Just it's daily sound effects. Yeah. So the 174 level was the 3-month level. It's holding at the moment. So we're sitting at 179 now after bouncing on it. So yeah, it's got a bit of time to go. But yeah, expectations of bouncing off this level would be moving back up to 219, and then if it gets a close back over 219, then back up to 292. It hasn't hard closed the level 3 yet either, because it came from the top side of it. So, oh, actually, sorry, that's a different time frame. It will hard close the level 3, so you'd probably say maximum retracement on that just at the moment would be that 365. That'd be kind of your maximum, but structure can change obviously, and this has got over a month to go on that. So okay, yeah, that's us. Like, subscribe, and all that jazz, and we'll catch you again on the next one.